Welcome back. You're watching Startup Central with me, Nayantara, working from home. My next guest has done a fundraiser of sorts, is in the business of identifying startups that should become high growth. Let me now welcome Sateesh from Endiya Partners. It's basically a B2B focused early stage VC firm. It has raised about $6.6 million right now from Nippon India. But last week itself, it just raised another $10 million from IFC. Its portfolio includes CureFit, Darwin Box, and others. Sateesh, welcome to Startup Central. Thanks a lot for coming on the show. So you've had a busy week, a lot of fundraise. Why are you raising funds at the moment? This is a time when people are conserving cash, and how are you getting so many checks?
So thank you, Nayantara, for the opportunity to be on the show. So this is our Fund 2, Endiya Partners Fund 2. We're going to be investing from this new fund. Obviously, because of COVID pandemic, fundraising got a little bit delayed. Otherwise, we would have wrapped up a couple of months ago. Obviously, there's a saying. You may look at it as a cliche. Never let a crisis go waste. From the very beginning of our journey, we've been focused on technology and healthcare verticals. We believe that there are going to be many great opportunities, especially in the early stage. Endiya Partners, the genesis, obviously, for us is that there was internet services and BPO services early on, which was kind of 1.0 entrepreneurship within India. There's a lot of internet, both consumer internet as well as kind of B2B2C. We believe now is the time for product companies and B2B companies that are going to address local opportunities as well as go regional and global.
Okay, so you've done the fundraise, you've got IFC on board, you've got Nippon just today as the announcement has come in. Can you tell me that when you look at this opportunity that the crisis has brought, what exactly are you looking at? What kind of startups are you looking at? What kind of entrepreneurs are you looking at? And I'm asking this on behalf of all those who are tuning in, needing to increase their cash runway, hoping to pitch to you maybe.
No, I think I'm sure there are lots of blogs and webinars and everybody talking about how do you survive the crisis. Personally, I was an entrepreneur in the Silicon Valley during dot-com crash, and then I was an entrepreneur during 9/11. I was a DFJ during the financial crisis or the downturn. I think we have not seen anything like this. I mean, this is unprecedented. It's really all about resilience and entrepreneurs who can clearly distinguish between the signal and the noise. You need to look at if you have structural issues or is it a cyclical issue. Because of the pandemic, every company is going to be affected. Obviously, if it's a cyclical issue, you need to wait till the situation gets better, and so that you can ramp up and increase your marketing and sales activity, rationalize your product portfolio. If it's a structural issue, you need to address that. There's no better time to address that. But if you're talking about birth of new startups post this pandemic, we all know that obviously there are many sectors that are going to have tailwinds. If you really look at either because of geopolitical reasons or semiconductors and electronics, there are going to be many, many startups from India. Likewise, if you look at SaaS startups that are going to fast track the digitization of mid-sized enterprises to large enterprises within the country, cybersecurity is going to be a huge opportunity. Healthcare, of course, digital health, medical devices, and even some of the emerging life sciences opportunities. All of these, we believe, will have significant momentum. And if they can raise capital and use that very wisely, they can build great enterprises.
Okay, so tell me something. It's always good to get a reverse pitch as well. What is something that you will never go near? It's always great to have that feedback, knowledge as well. What is your do's and don'ts for investing? And let's begin with what you will never go near.
I've always maintained that it's the entrepreneurs, who build companies or who make companies successful. It's not the investors. And the fact that we don't know many things, even as investors, is why we wake up very excited because we want to go learn from these great entrepreneurs. So very clearly, from our perspective, I think there may be many times when an investor probably would disagree with the entrepreneur, but not being disagreeable. So to me, this is a journey. This is more a partnership, entrepreneur, investor, both on the same side of the table. The fact that we learn, and there are so many unknowns, and there's a lot of unpredictability is what keeps us excited.
So I understand, of course, it's not the investors that make the companies, the entrepreneurs. So you're not going to tell me a straight up answer that there are some things that are just not worth investing in?
Whether during good times or bad times, right? I think we've always stuck to our thesis. We invest in sectors that we understand very well. I look at all of technology opportunities. My partner, Dr. Ramesh, is a cardiologist turned venture capitalist. He looks at healthcare domain. We invest in domains that we understand where we can add value. I'm sure you will appreciate the fact that we take tremendous risk, and we are often the first institutional check. Many a times, the founders just have an MVP, have a customer or two, may not have the entire team in place when we write the check. So we roll up sleeves and go to work along with the founders, whether it is helping them launch their product or solution, get early set of customers, hire other members in the team, and then refine the business plan to be able to attract kind of growth capital. So for us, I think we've not feverishly run investing in kind of flavors of the season. We've not done that, and I don't think we will do that. And like I said, our investment thesis 3 years ago was very similar to our investment thesis even now.
Okay. And with that, I'd like to thank you for taking the time out for joining us here. Here's wishing you all the very best. Let's bring you back on the show once you start using all of this money and dispersing, allocating, making new investments. It's been an absolute pleasure having you on the show. With that, ladies and gentlemen, we're completely out of time. Many thanks for tuning in. Remember, keep writing into us. Our email address, suc@etnow.tv. Pitch to us. Who knows, maybe one day you'll be a part of the show, but we'll just love your feedback as well.